I'm good. I'm good. How are you? How are you?
Very well. Very
Awesome.
well.
All right. It looks like we're live. The live thing's on. So, all right, everybody. Welcome to the Commercial Real Estate Morning News Show. And this is a new version of the show. We are going to start doing this almost every day. And we're going to do different asset classes. And today is the office one. And so we got our buddy Paul Sheedy is in the house. Hey, Paul, how are you?
Wonderful. Had a fantastic Christmas break. It was
Oh,
great just to switch off for many days and completely recharge.
okay. Do y'all do the figgy pudding? Do y'all do that?
Oh yeah.
You
Christmas
do
pudding,
figgy
and
pudding?
we
What
put
is it?
whiskey over and we let it light up, and it looks incredible, and the kids all love it. Yeah. They don't
Really?
eat the stuff, but it looks great. Yeah.
You don't eat it. You just like light
Well,
it up.
Christmas pudding. I want to eat it, but then it's covered in brandy cream, and why not?
Oh, okay. All right. So I guess that's our version of eggnog. We put whiskey in our eggnog. We don't light it on fire though.
Oh
I
yeah,
don't know
exactly.
because I've never had figgy pudding. So I was always wondering. I never had
So
figgy
good.
pudding.
Very
Yeah.
rich.
Is it?
So
So is it
January, we'll have to
like
get rid of some of these pounds I've managed to pile on incredibly quickly.
exactly. I know for sure. I know. That's crazy town. All right, we're going to talk office today. So before we get started with our lovely office segments, tell everybody who you are, Paul.
Oh, Paul Sheedy, founder of Unify ID, which is all about occupancy technology in buildings. And then, as I've said before, all about engaging and collaborating with other great companies to do great things and making all this work properly and building better buildings.
Awesome. Well, hey, David, how are you, buddy? Happy New
Good,
Year.
thanks. How are you? Nice to see you.
Nice
Happy
to
New
see
Year.
you.
Great
Happy
to see you,
New
David.
Year. How was your Christmas?
It was pretty uneventful. Lots of football and just taking it easy. Nothing too crazy or exciting. We've had. I mean, I don't know where you are right now, but we've had nothing but rain here. It seems like for
I know.
a couple of weeks. So not too much fun.
We're going to make Paul jealous, though. It's going to be 89 degrees today. So.
I'm only getting like 78, so I don't know what's going on down south over there, but you guys are lucky.
Yeah, it's going to be hotter in Hades today. I'm like, what the hell is going on? La Nina.
Wow.
It's a La Nina year. I don't know.
In fact, today's the first time I've seen blue skies in about a week. It's been gray and foggy, and I mean really foggy, but it's been good to see a little bit of blue today, but certainly not hitting your highs, Amy, that's for sure. But then who can hit your highs, Amy? You're a unique.
I know. You just gotta roll with it. Well, cool. Well, welcome. All right, we're gonna get started on this. This is we're gonna talk about the office market. And so I'll do like kind of a recap. Commercial Edge put out a recap on the 2024 of the office market. And basically it's a mixed bag. So there was 39.7 million square feet of office space delivered during 2024. I don't know why, but there was. And then, but it was probably the slowest office building on record. So that was only 9.1 million square feet, broke ground, which slowed down. And it's a mixed bag across the U.S., but it's interesting. And my lovely hometown of Austin, Texas took a hit this year, and our 12-month change year over year on office space, we're down about, our total vacancy is almost as bad as San Francisco, which is like, in San Francisco it's bad, but Austin is like 27% vacant in their office space now. So it's an interesting time to be in office space, and then I think I really want to start with the first story. Of course, this came out today at 6:48 a.m. And they're talking about how Marcus Millichap, CEO, comes out and says the Fed's unclear interest rate signals it just basically is going to hinder CRE trading because the Fed is unclear about what they're doing. We're going to talk about the Fed, David. We're going to start off with the Fed. We're going to talk about them. I think it's kind of an interesting time for sure. What do you think, David? The Fed hindering trading? I haven't seen it. Everybody I'm talking to, I haven't seen it.
I personally don't think so. I think that we're in a situation here that it's kind of hard to gauge where we're going to be a month from today when we have this volatility occurring every single day, if that makes sense.
Yeah.
Right now from where we sit, the Dow is down 680 points. The 10-year is trading at 454. And looking at, my companies, the REITs and stuff, they don't care about where their stock price is doing on a given day, right? They focus on the fundamentals. Since we're talking about office here, are tenants signing new leases? Are new leases being signed at higher premium, higher rental rates than the previous lease was? Are we seeing renewals? Like I think that's the key, both new and renewals. If you've got some of the best assets in the best markets, I really think you have nothing to worry about. It's the guys that have older inventory or, class B and C properties that I feel like are in the bigger concern here. And that doesn't really necessarily apply to most of the REITs that are out there. But I think that for some of these B and C assets, this gives that opportunity for redevelopment, whether it's repurposing into resi, senior housing, data centers, some mixed use type capacity, et cetera. This is opportunity. And what I wanted to talk about, and I have to drop in about 15, 20 minutes, but what I wanted to talk about today, the key for office is going to be, are we going to see significant investment activity? Are we going to see a bunch of institutional guys getting involved because they see some of the opportunities in some of these great assets? Are you going to see some of these big institutional guys team up with REITs or team up with other institutional investors to acquire portfolios of office buildings? I don't think the top tier REITs are going to be selling off trophy assets. But if, I'm just throwing out a hypothetical here, if BXP and Norges Bank and the government of Singapore can tee up and buy, 10 A- office buildings in the top 50 markets that BXP wants to operate in, and they're able to buy it at, let's say, 80 cents on the dollar versus what it would have, what it would be last year, 5 years ago, et cetera. I think these guys are really going to sharpen their pencils and look at what's the cost of the borrow in the current market. How much are my partners willing to pony up? Is there a JV opportunity here? And I think both on the terms of resi, office, this is where we're going to really see the smart money kind of tiptoe back in. Look at a guy like Blackstone. Blackstone's the perfect example. We've talked about this before. Look at London. Blackstone could be buying and selling the same asset class in the same market because of pricing. They could be selling on High Street and buying over by the Embassy, hypothetically, and it's still the same asset class. Yeah. So, look towards some of these, I think, sovereign wealth funds, institutional guys, private capital players to see where they're going to be deploying funds. But I think Bloomberg highlighted an article today on the top, like some of the top office transactions this year, coast to coast. One Vandy was, they picked out One Vanderbilt in New York because SL Green sold like an 11% stake in the property. And what are the implications? And if the office is dead, then why is foreign capital coming in and spending hundreds of millions of dollars buying stakes in our trophy assets? You know what I mean? Like, I feel like, again, the best of the best are going to do well. It's that other side of the curve. What's going to happen with that inventory? And I don't think we have any answer right now. And I think part of that may come from Washington. I think Washington may influence what may happen to some of these assets, as in, hey, we will subsidize the development costs for you to repurpose this property to a senior housing community through some special purpose fund that the government sets up to try to spur redevelopment, because I think senior housing is a type of asset class that we need to see a lot more inventory growth over the next 10, 20 years, as an example.
For sure. And I didn't let anybody, that's awesome, David. But before we go any further, you should introduce yourself, buddy. I didn't let you introduce yourself.
I'm David Auerbach. I'm the Chief Investment Officer of Hoya Capital. We manage 2 REIT and real estate ETFs, and we're a REIT research platform. I'm the publisher of the daily REIT Beat newsletter, and I'm a REIT industry consultant and a thorn in Amy's side on a weekly basis.
Thanks for coming, buddy. Okay, so to your point, though, BlackRock just bought the big office building in Tokyo for $2.6 billion. So I don't think office is dead globally. But what do you think about the recent sell-offs of crypto? So do you think that they're betting that they need to reallocate that into real estate? I mean, are they just taking profits? Their crypto profits?
I think they've hit that magic 100,000 figure, 108, whatever it was, and people going, okay, we'll get out now. It's just typical. It's like, my views of crypto. It's gambling on the extreme. I think people see that magic figure, and if sort of 100,000, okay, I'll pop out now. I've made my killing. It'll be interesting to see what happens in the next few weeks from the 10th of January onwards, and see where that goes. Who knows? Nobody knows. It's the truth. Absolutely nobody knows. And again, as Dave was saying, I see exactly the same thing now in Canary Wharf. I believe they've just refinanced for $2 billion. There are a lot of the loans in Canary Wharf. And again, Canary Wharf is run by Blackstone and the Kuwaitis. So the Kuwaitis own 50%, Blackstone the other 50%. And there is a lot of money in countries like Kuwait and Saudi, etc., where they want to get money out of those countries, which are more volatile than, say, UK or US. And there will carry on being a lot of foreign investment. I mean, I'm working with 20 Fenchurch Street right now, which is owned by a Hong Kong guy who manufactures all of the soy sauce. It's his little trophy in London. And but this is just normal, really. I think you see a lot of foreign investors coming in and looking at those stable countries like the UK, like US, where things don't go crazily mad as we see in many other countries. And it's just a safe bet to get your cash out and put in a bit of bricks and mortar.
Yeah, there was also an article there was also an article about AI and it impacting the insurance market, and that there was an insurance premium decline. Actually, in Q2, it was down for the first time in years. It was down like 7%, and I don't know if that was just because of transactional volumes, but it was Q2, and we're getting this article, 6 months later, so take it for what that is. But I think that's the most important. Yeah, go ahead.
I was just going to say, Paul brought up a great comment looking at like Abu Dhabi, Saudi wealth, those institutional investors, because their bogey, their investment criteria, whatever you want to call it, is so much larger than some of these other institutional guys. As an example, I have a couple of colleagues who, friends for many years in the business, who manage, REIT and real estate portfolios on behalf of like Abu Dhabi Investment Authority or Qatar Investment Authority, QIA. And their average stock position, just to buy a stock position, is $500 million. So if they're going out to buy stocks at a $500 million clip, whereas some of these, think about how many office buildings you could buy for $500 million.
Right.
Think about if you take a JV stake in a partnership, how much you could buy at $500 million, just as in one example. These guys could go out and, like I said, buy the best of the best, or even in fact, the worst of the worst assets because of that long-term horizon that those institutional investors have. I'm talking 50-year type of vision that they can go out and buy all that Class C stuff, tear it down, rebuild it, play it out for 20 years, and they're going to make in 25, 50 years so much off of that investment that it's, for what we consider, it's de minimis to them. That I think Paul brought up a really good point. Forget the government of Singapore's and our typical institutional guys. It's this Saudi oil money, family money type of stuff that could really drive the commercial real estate rebound over the next 10, 20 years for us at some of these distressed asset classes.
Have they been typically sitting on their hands for the last couple of years? Or have they not?
They're involved. I mean, again, you don't really hear about them on the direct side, because on the direct side, they're basically funding a lot of that stuff over in their neck of the woods. I mean, go look at all the Abu Dhabi commercial real estate development as an example. But again, in the top trophy assets across the globe, yes, they are involved, and they're going to get more involved because, like, frankly, Blackstone's just a phone call away to try to be that partner. So are those guys. And it's for the reason that Paul said, because they're trying to get money out into better yielding asset classes and opportunities. And I hear this from other foreign investors that they try to, especially for U.S. REITs, because our dividend yields are, much higher than what they're able to get locally.
Okay.
So sorry for going off the path there.
No, it's good. It's good conversation for sure. I mean, and so even if it's not local investors bringing back the U.S. real estate economy, it could be definitely foreign, right? Typically U.S. real estate has been fairly safe investments for most investors, right? So it's kind of an interesting thing. I think the whole MENA region, as I hear more and more, that whole region is just exploding. Like, it's just going crazy. Abu Dhabi, Riyadh, Dubai, they're all just going as gangbusters over there. More and more.
And the profitability. I mean, if you look at Kuwait, especially, Kuwait is the exception. Their profitability on oil and gas is just vast. I mean, absolutely vast. What they sell a barrel of oil for compared to what they take out of the ground is quite incredible. And that's where right now they are thinking. They have got these 2030, like Saudi 2030 vision plan, which started, I guess, about 10 years ago. NEOM is fast moving ahead. They have the Red Sea project. They're building the biggest theme park in the world between two huge valleys in Saudi. And I have to say, from walking around Saudi myself, it is not the most comfortable place in the world. I don't know if I want to spend the whole day out in a theme park in Saudi, but there you go. But their vision and the extent of what they're building over there is far beyond what any of us in the US or Europe are looking at. I mean, it's Herculean what they're up to, and it is multi-decade levels of planning they're doing. I don't think we really get to that stage in Europe or US any longer. They're changing the whole face of where they will be destinations, places, in decades to come, and they're taking a long view. The same way Dubai was the first to really jump on this, and if anybody's been to Dubai before me, it's quite incredible what they built over there the last 2 or 3 decades is incredible, absolutely incredible. Now, really, it is just Disneyland for adults, I call it. But the buildings, I mean, the Palm, all these things are built out there in the sea. They reclaimed huge amounts of land, built some of those spectacular buildings. The malls are like nothing you've ever seen anywhere else in the world. And that's what gets people in. And people want to go to Dubai. I mean, huge number of my friends are there for Christmas, and it's just a place to go to get lots of sun, shop, have a great time. And I see Saudi really changing, and it's culturally, it's one country where I've seen change more than any other. It's fundamental, huge speed of change and how it's being perceived going forward. So, but they got mountain of money, and they need to get there, not just staying in Saudi. They need to be buying those asset classes in New York and London and elsewhere. So that's where the cash will carry on being.
And one more point to add on to what Paul's saying: if you look at a city like Las Vegas as an example, or New York City, how they have customized, frankly, some of the offerings to try to appeal towards those foreign high net worth investors / travelers and consumers.
Right.
Because, I call it Field of Dreams. If you build it, they will come. If you lease it, they will come. So like I was at a REIT conference a couple of weeks ago in Vegas at the Wynn, and you look at some of the tenant lineup of retail and some of these properties where a T-shirt at like the McLaren store is $75 as an example. And it's like, who the F is going to spend that type of money for a T-shirt? And it goes back to that expression of, if you have to ask how much it costs, you can't afford it, right?
Yeah.
That these guys that are spending these money, I mean, again, I'm going to tell, it's not Americans that are in there shopping and consuming all of this stuff.
Yeah.
It's funny, yesterday I drove past Knightsbridge, and in Knightsbridge they have an incredible They're the most expensive apartments in London. It's called One Knightsbridge. And it was quite funny. I drove past in the evening, and there was only one of the apartments had lights on. They were all empty. These are the most, like, you're talking about 40 million, 80 million pound apartments. Nobody is there. They're buying these things as their asset. You're a multi-billionaire. You want to get some cash.
Paul, that could also be
Paul,
that could also be a peditier for some of those guys.
Yeah.
You know what I mean? Where they're only showing up a handful of times a year to stay there.
Yes, completely. Yeah.
That's crazy. So
when you have FU money, the world changes. You know what I mean? I've got a place in Aspen. I've got a place in Dubai. I've got a place in London. I've got a place here. You don't care at that point. Oh, I'm only in London twice a year, but I've got an 80 million pound place that I stay in when I'm there twice a year.
Exactly. So these billionaires know that they can flip that prime house at any time they want, and it's safe money. It's very safe money. One Knightsbridge is one of those addresses which isn't going to be replicated.
So to cater to those foreign investors, are the U.S. Sponsors, are they changing their pro formas? Are they changing their investment horizons? Because typically in the U.S. it was like we hold 5-7 years and we get it out of there and we move it on to the next asset class. Are they, if you're catering to that type of investor, are you having to say we're going to hold it for 20 years or we're going to hold it for 10? That would be kind of interesting to see.
Well, I guess the answer is it depends. And for some of these guys, remember that, like, let's use the SL Green or like a healthcare JV or something like that.
Right.
The REIT operates the property, but the investment sits on somebody else's books. It's not sitting on the REIT's books necessarily. Oh. So, and again, really, it's going to be Norges Bank is the one whose balance sheet that the deal sits on, but the REIT or whatever investor would collect the income stream as the partnership off of that. You know what I mean? So okay. I think it just depends. And if anything, some of these guys could almost set up like pool one, vehicle one, whatever you want to call it. Yeah. That this is off the books, but we have a stake in this. It does flow through to our bottom line. Our stake in this pool is worth X. Therefore, you and investor, here's how much that's worth to you today in our quarterly earnings.
Right. Yeah. I'm sure a lot of those deals are getting done. So interesting.
And you're going to see more of them, especially if the market keeps getting more and more beat up. If we see more distress, if there's more stories that are out there, again, foreign guys are going to be like, hey, I'm willing to sacrifice 5 years to get an extra 5%, 10%, whatever it is.
Yeah. When I talk to people in the market, like the money guys, right? So I had a conversation yesterday with a finance lawyer. So he works for the lenders. He's like, Amy, I am busy. I am so busy. Like he goes, I have more work than I could ever do. So there's stuff happening, stuff's trading, something's happening in the market. So we're just not seeing that's in the news yet. So it'd be interesting to see what happened to Q1 results of stuff that's happening. But he's like, he goes, I am so busy because I don't even have time for Christmas. I'm so damn busy. I was like, oh, interesting. But, I guess
think investors are getting more reasonable, and that's why, I'm a buyer at a 5 cap or a 6 cap. This is at a 5 cap. Well, we're too far apart. And now it's 5.7, 5.5. Let's split the difference, meet at 5.6. You know what I mean? Like, I feel like both buyers and sellers are getting more realistic with, here is what the market says it is.
Right.
Here is where assets are trading. Do we want to trade this asset?
Yeah, which is great because, buyers were digging in their heels going, I can't take that loss. I can't take that loss, hoping that they could just wait it out. But now they can't wait it out anymore, I guess. I mean, it must be what's happening. Either that or they're just getting tired of taking the loss every month. It's better cut their losses ahead, right? I know I still own some assets and it's not fun. At the moment, it's not fun. We bought at the wrong time. Yeah, it's never fun. Crazy town.
So it's much more of a long. I think the whole momentum of this market's changed. I don't think there's really any more short-term wins. It's all having to make that long-term bet. I think that's the big fundamental change the last couple of years in the market. The easy money, I think, is gone.
Yeah, for sure. So what do we think? Pull out crystal ball time. What do we think is going to happen in 25? Does everybody think it's going to be a fabuloso year? Do we think it's going to be meh? What do you think?
I think we're going to see slow and stable again. I don't think we're going to see anything exciting really happen. I think people will start looking at their assets. They'll start working out how they squeeze them much harder. People are going to have to start making decisions, as David said, in the Class B and Class Cs. They're going to have to make a decision. Are they going to go and change them into resis or data centers or whatever else it might be, or they're going to stick it out and try and see if they can turn it around on those Class Bs and Cs. I wouldn't like to be holding that. I wouldn't like to be holding those asset classes. I think the Class A's are fairly okay. My gut feeling, and I'm just saying my gut feeling, is I'm seeing more and more companies going, actually, let's get a few more people back into the office. It's not fundamentally huge, but it's definitely a bit of a turnaround. And the Class A's, I think, are going to be fine. I don't think they need to worry too much.
Co-working can't save the office space, right? We don't think it can.
It's getting bigger and bigger here, that's for sure, in the UK. It's becoming, I mean, I'm so glad. I mean, previously, I think I had 20 offices. And again, I was having to do 5-10 year leases and all the rest. I'm so glad those days are well and truly gone. I think co-working is going to be a really important sector now going forward. But it's a hard sector. I mean, co-working is, looks like it's lovely, but it's a lot of hard work. Anybody running those organizations, you really have to have your finger on the pulse of what's happening and be incredibly reactive. And actually, the issue is that it's the individuals renting want such high standards and the low rents, and that equation isn't really working. We've seen a lot of victims now the last year or two in co-working where maybe they were over-egged, they were a little too glam, a little too expensive for the rents coming in the door, and they have failed. But I think it's the most interesting market there is out there at the moment.
Yeah, interesting.
I think one man's trash is another man's treasure. I think you're going to see opportunities here, whether it's local investors, regional guys, et cetera, going globally, where if, as I mentioned before, if the banks are lending, if the markets are open, if it's still business as usual because fundamentals are still the way that they are, I think you are going to see more transaction activity across a lot of these sectors. I think you're going to see more of an office to resi conversion. I think something is going to break there that's going to make the pipeline easier. I'm not necessarily saying more affordable, but somehow easier to spur this office to resi redevelopment talk that we've been hearing for so long. Yeah. And like I said, I think it's going to come from Washington. I think you're going to see a big growth in manufactured housing as well, because it's the most affordable housing product that's out there. I don't necessarily know what it's like on a global scale, but knowing what we have here domestically, the fact that I can go on to Amazon and buy a manufactured house on Amazon, I think you're going to see some kind of bite taken out of that housing demand apple that's out there. Because I'll tell you what I don't see happening. I don't see mortgage rates resetting anytime soon. I don't see affordability occurring anytime soon on the regular single family housing market. And I think you're starting to see that in some of these housing numbers that are starting to flow through, that elevated mortgage rates, elevated housing values are hampering the home transaction market, which means, again, secondarily, I think it's going to be a great year for single family rentals ahead. I think that's a sector that's still not going to lose any of its luster until we see, again, frankly, a reset on 30-year mortgage rates. And I don't think that Washington can technically interfere, whatever you want to call it, to make mortgages more affordable for the average consumer, but something has to give.
Yeah. There's going to be enough of
and that's different than the office conversation that you want to have here, but that's my take.
but it's true, and it impacts everything impacts the office market, right? Depending on where people are living and how they choose to live, and then that determines where they go work or where they're going to.
Well, if companies demand more people back in the office, and that means that I've got to go move closer to my office, or I'm got to, move back home because I relocated or whatever it is,
right.
I think we might see more of that, but.
Yeah. I mean, for
Look,
sure.
People said, go back to the office, go back to the office. Oh, we've changed our mind. We don't need people to come back necessarily, right? So either hold them to it,
right,
or don't float it.
Yeah, no, I know.
We've seen it here with HSBC. So HSBC have a massive headquarters right beside my building, and they've walked away from the lease to start being an incredible building near St. Paul's, and now they've realized, oh shit, we haven't got enough space anymore. So now they're like pulling backwards, going, oh, maybe we can just take back some more of our headquarters building. They looked at that figure of, okay, this many people are coming back to the office, and then they realized actually the culture's changing, and now they ain't got enough space. What I was going to say is on the manufactured housing, I completely agree with you, David, and that's really one area that I completely believed in the UK was going to take off, and I knew some people in these sectors. Where really you could start manufacturing towns in massive speeds. And actually, every one of them in the UK has now gone bust.
Really?
Because the planning applications take so long. Now, we have a new housing minister here in the UK, and I know we want to talk about her office, but she's a housing minister, and she's come in. But again, with this Labour government, it's quite funny. Absolutely none of them have ever run a business. So we got a new government of people who've only ever been politicians, never, not like Carter, even run a peanut factory. They've run nothing. So, great ideas, and then they get to reality of how business really works, and they're now sitting there going, oh, this doesn't actually happen. But she's come in and said she's going to abolish all planning laws. She's going to come in. You want to get built, it's going to get built. There's nobody's going to stand in your way. Now, what I do think her only hope of really making an impact here on housing is to say, right, let's get these pre-manufactured factories back up again, and let's just fast track and give them a 3 or 4 year order book, because you can't run this on, when you're manufacturing anything, you just can't run the short term. And I think this is her golden opportunity to get right. Let's get them back up again. Let's get 4 years of building products in place, pull the prices right down. Leverage where we have to go, because the house prices here in the UK are astronomical, and the income multiples don't work anymore. As I said before, that's the problem we have in the UK.
So you have a supply problem, basically.
Have a happy New Year, guys.
Happy New Year, David.
Thank you.
Guys.
Yeah.
See you in 25.
Yeah. So So you have a supply problem for sure, right? I think. Yeah, and so there's a technology out there, really cool founder who's actually building something. Go back to the Middle East, building something in Dubai, but he can set up a. This is not office market related. I think we're off that topic now, but he can set up a modular facility and spit out a subdivision in months. Like, it's the coolest thing ever, and he uses AI in the designs of everything, and so then he can say he'll print like a house a day, and all he needs is a 40,000 square foot warehouse to do it, and he'll bring the materials, and he'll do everything. He uses the AI, sets it up, and somebody took him up on his offer, and so now he's in Dubai building out a subdivision. He said it'll take me a couple of months, and I can pick up shop and go somewhere else, right? And I'm just like, holy buckets, that is super cool. But it's interesting. So once he can do that, then you can replicate that anywhere, right? Just find a 40,000 square foot warehouse and just sell your tech, right? And anybody can do it. And it's all modular.
Yeah. It's got to be the way forward. I really think morally we got to wake up to the fact that we've got a generation now who literally owning a house is a dream, and that shouldn't be the case. It's wrong. And I did see that your housing, the amount of homelessness in America went up 18% last year.
I know. I think a lot of them are in the Bay Area. No, I'm just kidding.
Really?
I have to take it. I was just there. For a couple of days. There are a lot of homeless there, and it's there's homeless everywhere. And I think it's horrible. I don't think we know how to handle that very well in the U.S. And, but there's more homeless in California because they pay them there. So they give them certain things. And because, you know, if you incentivize someone to be homeless, guess what's going to happen? They're going to be homeless. So I don't know. I don't know how to solve that problem. That's a really difficult problem to have. But yeah, no, they give them a lot of things there in California. They give them phones, they give them different things. And then I don't know if it's actually really solved the problem, but you know, it's an interesting thing.
There's rarely a magic bullet for any of these issues. We were talking about jails here in the UK the last couple of days about how
were you?
we've literally all the jails at 99.9% capacity, and the whole thing is breaking. And you know, we've got to rethink and look at the Spanish model. And this is a great thing. I mean, it's a great thing about global, you know, having looking at globally at how different countries do different things. And thankfully, we got an amazing independent advisor whose father is one of the most incredible men I've ever met. And he went into jails and taught people how to mend shoes and cook keys. And he takes convicts and then gives them a job, but then supports them. I mean, really supports them. Make sure they work out how to do the finances and all that. And this is, you know, people like Timson here in the UK are people who really change things. And this is where, you know, you can turn people's lives around, but I think it needs a will. But yeah, it's look, getting back to the office side and not going off topic as I constantly do. I think this is a year where people are going to have to, we'll stop sitting here trying to crystal ball, you know, look at the crystal ball and think what is going to happen. They're going to start living the reality of actually things are going to go slowly back, as I've probably been saying to you for 6 months. There's not going to be a magic turnaround. There's not going to be, nothing's going to happen spectacularly fast any longer. I think we over-egged everything for too long, and now we have to sit back and put the oven on low and see what comes out of the oven in a number of years' time.
I think so. I mean, it's in the US, I don't know in the UK, but in the US, it's like one of the lowest years on as far as any sort of office development, which I think is very good. We're oversupplied. But, you know, we can't seem to time markets very well anyway. So then all of a sudden we're going to, like 5 years from now, be undersupplied probably or something like that. And then there'll be this big boon and we're having to build, you know, stuff. And then we can't get anything built fast enough. And you just don't know. I mean, it's so.
But this is really down to this great little democracy situation we have in 4 or 5 year terms.
Yeah.
And this is why I keep saying for countries that run democracies, great, but you got to start having long-term plans. You got to start taking people away midterm and going, right, what is a 10-year plan, a 20-year plan?
Yeah.
And you can piddle around every 4 years when you knock the next president in and out and all the rest. But the country should know where it's going to go for 10, 15, 20 years. And this is where, I'm sorry, but a lot of these other countries around us that don't run those democracies are having a good laugh because they are making those long-term decisions. And unless we get everybody singing from the same hymn sheet and 80% of us, 80% of the economy knowing where it's going on medical and housing and education, you know, these are not things to play around with every couple of years. And I think the political football has got to be put to one side, and the chess players have to come out and start playing that long game.
Yeah, it'll be interesting to see, especially in our environment, on what's going to happen. Y'all, I know y'all are laughing. I know you just pulled out the popcorn and y'all are just having a good old chuckle looking at us Americans trying to see what's going to happen on January 20th or whatever it is, whenever he gets inaugurated. I don't even know. But
yeah,
it's interesting because I mean, I'm all for, you know, making government more efficient. Don't get me wrong. I am. And so if they can cut out a little bit of fat but they're only going to get so far. This, like, making government efficient, taking something that's this behemoth and thinking you're going to change it in 4 years. That's just like, I don't know what you're smoking, but it must be great. Like, it's like, you can only do so much, right? So it's going to take a monumental shift to change that. And I just don't want them in the meantime to break it because they're on this kick. And I think that's what they're going to try and do. They're going to try and break it, right? That's the only way.
And I think Elon Musk will do. I mean, if anybody turned around and said, oh, we can get rid of 80% staff at Twitter, you know, you'd laugh at you. But he did come in and he got rid of 80% of staff pretty much nearly overnight. I mean, you know, it wasn't really much overnight. And I think this is where maybe, you know, he is probably the only person on this planet that can go into US government to go, actually, you know what, is this actually needed? And ramp through. Now, Whether that'll end up being a complete mess, who knows?
Yeah.
But if anybody doesn't really care about creating a mess, I think it's your next incumbent. He's not. So it could be. Look, this could be. I keep saying this could be incredible for America, or it could be an absolute disaster. And what I often say is that he could come in and make America great, and literally take the foundations of America away, and it'll all collapse by the time his 4 years are over, and be, how do we scrap everything back together again? But
yeah, it'll be an interesting time. I mean, I mean, America's so resilient. Like, that's the one thing. Doesn't matter who's in office, because the American entrepreneur and most Americans are just super resilient. Like, whatever, we'll just, especially out the entrepreneurial, community, because it's like, all right, we're just going to bob and weave whatever you throw at us. Like, we're just going to act like boxers and just go around it, because, that's how we are.
Yeah.
So I think that's the one thing. But you're right. It would do so much good for the American economy if we knew what the path was. Like, once you just know what game you're playing, whatever that is, like, what are the rules? What are the bounds? What is this? And as long as we know where we're headed, then everybody can navigate their course and they can do whatever it might be. And so if we had that 10, 20-year plan, right, I think it would do wonders for us. But, we'll see what happens. But I can't imagine, but I really don't think that if I was going to make any sort of predictions, which I don't think the Democrats have a snowball's hell and chance of ever winning again, and not for 20 years, because it just, they basically imploded. So that's one thing I think I'll put my flag on, is like, they got to figure themselves out. So it's really kind of interesting for sure. But yeah,
the same thing happened here in the UK. I mean, the Conservatives are the most successful party in the world, not in the UK, in the world, in terms of what they've achieved over those hundreds of years, and they imploded. And they imploded under what I think in history we'll look back and go was a great leader. I actually think Rishi Sunak was one of those uniquely great leaders. Just anything that could go wrong went wrong, and in the same way, we look back at a guy called John Major, who was a prime minister here many years ago. But actually, everybody looks back at him now and has incredible respect for him. He was seen as boring and all the rest, but actually, he was fundamentally a great person who took the right long-term decisions and didn't play too much to the 24-hour immediately. You need to make a decision, or need to be seen to be doing the right thing. He made the right fundamental decisions. I think Rishi Sunak actually probably made a lot of the right decisions too, but he got caught up with just a lot of idiots around them. And I wouldn't write the Democrats off either, because depending on what happens with Trump, and whether Trump literally comes in and crashes everything and globally is hated by all leaders and
everybody, which he has a chance. I mean, I don't know. I mean, well, that's true. I mean, you look at, back in the days of when I was in corporate America, you look at bench strength, right? And you look around and you kind of see who's on their bench and that they can bring in. And I don't know if they've got a very good one. So,
I mean, I have to say, the rest of the world is looking at some of his appointments going, is this
I know.
Joke?
Seriously, I know. It's like, come on. So it's got to be so bad that it absolutely works. Like, it's got to be so far out there that it just works because they have no other choice. And, they make that. So I was listening to a podcast the other day talking about, like, if you bring in a business expert to come into government, you want to bring in somebody. So say you take somebody from like D.D. Taylor, who's been in healthcare real estate for 45 years. You don't put him in healthcare, overcharge Health and Human Services, right? Because then he can just help his buddies. You put him over something like housing or something not water related, but he's successful enough. He's just going to figure it out, right? Well, Trump's not really doing that, right? He's just picking people in that industry, placing them in that industry. And I get kind of the judgment behind that, because they're the expert. They've been in the industry forever, but there's just too much of conflict of interest there. Like, just take somebody who's super successful. They had to figure it out. So just put them somewhere else and they'll be successful just because that's their personality. That's who they are. They're just going to be successful. I don't know. He's not listening to me, obviously. I'm sure he loves our show. and he's
No,
watching. He has to be watching every week. I know.
Live.
It's our show.
But and then watch it back again.
Exactly, because he listens to me. I know. He's just like,
Oh, yeah.
I'm
You
his
delete yourself as
unofficial
well.
advisor. I should get paid. I should totally get paid. Like I should be on the, but I don't know. I think I might get whacked by Elon. Elon would whack one of my positions. So I was waiting my time. But
and this is where I worry, where his base, who believe he is the great Messiah, etc., and they then start looking at actually he's just making all his billionaire friends very, very rich. That would make turn on him. And actually there was a poll recently, and the UK and US, I'm afraid, topped it. US number 1, UK number 2, in our society being so broken and divided.
Really?
Yeah.
Yeah.
US number 1, we were number 2, and that's where I think playing politics too much. I think the average person in the street goes, you know what, you're just playing with my life. And we have a thing here called the squeeze middle, where the middle class have just been massacred. It's
the same here. And you know what? Yeah. The squeezed middle are the people, that's the majority of the people that would work in offices, right? If we're going to take it back, I mean, the squeezed middle are the people that right? Yeah. And so if the squeezed middle exists and it still exists and they're still in pain, they're not going to want to return to an office. They can't afford to go. Like I can't afford to travel. If I was to go like work in an office every day of the week, I mean, first of all, I love working at home, but if I had to go travel, I couldn't afford the gas. If I had to go to downtown Austin, I couldn't afford the parking. I couldn't afford the gas that I would have to go. I would have to find thank goodness there's transportation, but still, even if you're doing the bus every week, like still that's a cost to go when I could just pull my, get my shirt on and be in my pajamas on the bottom and go work at my desk, right? The commute would be 10 steps, right? Whatever.
Yeah.
But I can't imagine people going from a 10-step commute to a 10-mile commute or a 20-mile commute or a 30-mile commute. It's just, it's a different world. So I don't know what happens in the office environment, but it's going to be interesting. It's going to be interesting to see.
Well, the issue is that when you're not going into Austin, lots of other people are not going to Austin. Those shops are there to basically build that town of Austin. The sandwich shops, the coffee shops, the pubs, etc. They end dying. I mean, in the city of London, nobody goes in there Saturdays, Sundays. Nobody, right? But no one's going in on Mondays and Fridays either. So these businesses can't survive on a 3-day week. Yeah. And we're seeing, one of my favorite pubs in Fleet Street is now gone because it's been there for like 250 years. But like the traffic has just got to the stage where it doesn't make sense anymore. And that's what I think is sad. And that's where,
Austin's done a really good job of moving a lot of residential downtown. It did do that. Right. So it kind of saved the downtown because people are actually living there. So it did do that. And there's a good cohort of mixed use or resident stuff on top. I mean, they made that push. No joke. I remember 2006, 2007, they went and said, we need to build mixed use residential on top in the down, because there wasn't any in 2006, 2007, there wasn't really a whole lot. And then they started building all of these towers and all of these things different. And I think that saved the downtown of Austin for sure. Yeah.
Because I had a French CTO at one stage, and he'd actually been out in Austin probably around that period of maybe 2007 to 2010, I think. Yeah. And they moved from France to Austin, Texas, because it was going to be the next big sector, and it was great for them in those early days. Really, really good. Yeah. And is tech still big in Austin now? Or what's the situation?
Yeah, it still is. Yeah, for sure. We have a big semiconductor cohort here, and we also have but no, it's not what it was like during the party days of 1999 when 360 was software loop and there's a startup here and a startup there and a startup everywhere. But there is a good cohort of Applied Materials is here, Samsung is here, Intel is here. I don't know what's going to happen with Intel, but there's a good semiconductor cohort here, and all the suppliers of the semiconductor is there. But and then we have the startups that are here. I'm hoping, I think for Austin, which is going to be really good at some point, is we just need to get a better investment community here. And I think that's true in most places, but our investment community is not as big as say California. Like I just was in last week, I was in San Jose. I was in Palo Alto, and I'm walking around in Stanford, and you're seeing, oh yeah, that's where Mark Zuckerberg was, and that was this, and that was that. And I remember meeting this person, that person, and everybody's walking around, and you still see the vibe of all the startups and all the money that's there. And it's really a totally different vibe versus Austin, where it's kind of fragmented and it's over here. And there's a startup community here for sure. And Capital Factory is one of the places, but it's just not as vibrant as California is, And so it's kind of an interesting thing. So there's big corporations here for sure. I think the startup community that's one thing. I think if they figure that out, if the state of Texas kind of figures out how do we help the startups, I think that changes the game for sure. Yeah.
And where are American construction companies looking at growing outside the four walls of America? Is that a big thing there, or is it not really? Is America still, they sort of build in America and that's just a big enough market?
Yeah. Yeah. The only people, and that was another conversation I had when I was in Stockholm.
Yeah.
Right. And in Copenhagen, right before Christmas. And it was we don't have to think globally here. I mean, the US market is so huge. Like there's construction companies that just stay in Texas. They never go outside of the state of Texas, and they're billion-dollar companies, and they just stay in Texas, right? They don't have to travel that far. They can just go to Houston, Dallas, Austin, San Antonio, and that'll be those 4 cities, even just those 4 cities, not anywhere in Texas, and they'll be a billion-dollar company. Just those 4 cities.
I think it's a big difference. I mean, as I mentioned this to you before, like even I do a lot of the trade missions, overseas trade missions with the Department of Business and Trade here in the UK. And we do see like everybody. My first one, I think, with JCB, the big construction mechanical diggers and all the rest with us. Yeah. But Arup and Mott MacDonald and a whole host of others will be on these overseas trips all the time, and that's maybe a trick that US needs to change. I mean, what's your growth rate like now this year in the US?
You mean our GDP growth rate?
Yeah.
It's probably still hovering in the ones. I haven't seen it lately, 1s or 2s. I don't think that's still but that's good compared to. I think I haven't looked. I'll have to look. Don't.
I know we hit exactly zero. Exactly zero.
You're exactly
0% growth. I'm like. And this is where I think actually, people like me, let's just say, good entrepreneurs are looking at that sort of figure going, this is just nuts. And a lot of what I'm focused on now in 2025 will be growing overseas markets massively. That's where my big focus is. I think UK's steady as it is. We've got some new technologies coming along, which I think will make some impact. But my whole focus will be really on how we grow other international markets rapidly. Yeah. And maybe that's a trick America's going to miss. And maybe the tariff piece again now, and the anti-China piece and all the rest of the things is interesting because Elon has a huge interest over in China. And that's where we're going to see a little bit of an issue. But I think
he's totally blowing smoke. If somebody can't see right through Donald Trump, I don't know who can't. Like seriously, he is so transparent. He did this before. He blows smoke, and foreign leaders, if you're listening to me, he's full of crap. Like he'll say he's going to do something, and I'm going to tariff you this, and I'm going to tariff, and he blows all this hot air at you, and he looks really mean. But he's full of crap. And so, yes, when it comes right down to it, would he do a tariff? I don't know. I don't know if he would. Like, I have no idea if he would or not. I mean, I think he'll get it. He's the greatest at calling people's bluffs and people just give in. I just want someone to say, nope, I'm just play chicken with him and see what happens. Because I don't know if he actually would do it. First of all, I don't know if he would. And does he have the power to do a tariff, or is that Congress? Like, I don't even know. I'm just like, it's kind of amazing to me. And it's not that I'm not a Trump fan. I think he has really cool some of his policies are very good. And, my crypto has gone up since he became the nominee. So it's, that's nice, but still it's definitely an interesting dynamic for sure. It's definitely a complete change and everybody's going to have to get used to this wild cardness that comes out of America. Right. And I don't know what happens there, but the tariff thing is obviously everybody's talking about it, and he knows how to master media and conversations. That's one thing the guy knows how to do. So if you're going to come in and threaten, use the U.S.'s power to kind of threaten things. And I don't want to demean what we're trying to do here in the U.S., but still, like, he's not hard to read. Like, I don't understand why people think he's hard to read. He's not really hard to read. He's just,
but he's not consistent. He's not consistent, and that's what
he's not consistent at all. Like, the big thing we were talking about today was, like, everybody thought he was the anti-immigration president, blah blah blah, and then he was just talking about giving people visas because Elon was in his ear and going, "We need engineers. We need people with visas." Hello,
He's saying, "You think I took that rocket down and we caught it with chopsticks? But I'm just using American brains." No, we didn't. I took the best brains from around the world, and that's why it happened, Donald. So
and so now he's changing his tune, and so everybody's getting ticked off. I was like, okay, yes, he's going to be president for the next 4 years. Like, I can't do anything about that. So he's going to do whatever he thinks he needs to do. So, but I agree with the visa thing. We need the smartest people, no matter where they are.
Exactly.
And honestly, at the end of the day, why do they even have to come here? Why can't we just, I outsource so much crap to, and my development is like Hungarian and Indian. Like, do they even need to come here? Like, I don't understand, other than IP protection and different things like that. But still, like, there's got to be different ways to I'm not going to say that phrase. There's got to be different ways to do things. I was going to talk about
100%,
cats.
100%. You're going to talk about what?
I was going to say there's got to be different ways to blank that cat, but I'm not going to say that. That's kind of gross. I don't want to talk about that.
Okay, you cat lover. We'll move on.
Anyway, listen. Cats are awesome. What are you talking about? Cats are awesome.
I have to admit, I don't like cats, but I have spent a weekend, like Christmas, with my daughter's house with 2 blue Russian cats that were so stunningly beautiful. I have to say,
what's a blue Russian cat look like?
Oh, just magnificent gray. They were so.
Oh, are they short hair cats or long hair cats?
Longer shirt, medium, but very beautiful, very, very beautiful cats. And I am somebody who really doesn't like cats. Give me a dog every day of the week. But they were quite special, those two. Anyway.
All right.
Talk about officers again. Talk about cats. How the hell do we end up talking about cats?
I don't know. Because you and I squirrel. We talk about all sorts of things. All right. Parting thoughts, since we're at the top of the hour. So parting thoughts for you.
Parting thoughts. I think 2025 will be a lot of people settling down and running their assets correctly and watching the bottom line and realizing that there's no magic going to happen anytime soon.
They're going to have to adopt prop tech. They're going to have to use technology to solve their problems.
Let's hope so. I mean, like you mentioned the insurance earlier on. I'm working some tech now, and we're looking at maybe 15 to 20% cut in insurance premiums with the tech.
Yes.
When the tech is finally, this is where my focus will be in 2025. It's building that return on investment model for prop tech. Yeah,
for sure. Yeah,
important.
That's awesome. Well, thanks for coming.
Let's get modular housing back again, please. Let's get
I know. We got to figure that one out. Yeah, we
need politicians to think big and to realize that those factories have to run for next X number of years to make it viable.
Oh, we're so far behind in the U.S. It's like insane. Like, we were barely keeping up with demand until COVID happened. Like, we were squeaking by with supply and demand, and then COVID happened and totally disrupted it. And so now we're like 500,000 units short, and there's no way we're going to catch that. Like,
we're 1.5 million short in the UK, and we're 160 your size. Yeah.
Oh, we're somewhere there too. I mean, I'm talking about, we can only do 500,000 a year at the max we can do.
Yeah. Okay.
And we're like 4 million. Yeah. 4 or 5 million short too. Like, there's no way we can catch up. Like, it's insane.
Unless we get more, unless we get everybody lined up and go, right, let's get on and let's do it.
Yeah,
and maybe this is what Trump is good at doing, and going, right, we're doing this. Get on.
Maybe. Yeah. Maybe. He can get stuff done when he puts his mind to it. It's just got to figure out where he wants to go. Yeah.
Wonderful. Well, Amy, I've really enjoyed our podcast this year. It's been
so much enjoyable. Fun. And next year's going to be even more fun. It's going to be awesome.
I'm really looking forward to 2025. I think 2025 is going to be an amazing year. I think we all got to get focused much more and
exactly. That's it. All right. Have a happy
week. Take care. Have a great 2025.
All right.
Take care.
You.
Bye now. Bye-bye.
And that was it. there was our show, our office show, which, you know, if you know me long enough, that we're going to squirrel and talk about something else. So thanks for watching. This has been a broadcast of the U.S. PropTech Council. And in the 2025, we will be having more days a week. And actually, we'll be going 5 days a week or 7 days a week. We're going every day. We're going to go every day in different asset classes in real estate. So we're going to talk our next one. We're not going to take off tomorrow because it's New Year's and then New Year's Day. But look for us on January 2nd. We're going to have our multifamily edition. So it'd be super awesome. Can't wait to have my friends, Shelly Robinson and Mike Brewer, my buddy Jason Hull, who are all in the multifamily space. And we're going to be talking the multifamily industry in the 2025 year ahead, in 2025. So thanks for watching, and y'all have a great one. We'll see you.